Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for a brand new month. It's July. It's the 1st of July, and it's 2021. And the creeper uptrend strikes again, which is, I don't want to say it's no surprise. It doesn't mean it's easy, but we do have this prevailing dominant uptrend, and that is shown in a series of higher highs and higher lows in the market. And that's just where we are, despite all the volume and all the other fundamental and other evidence to the contrary. The market did creep, and I do like to use the word creep because that's what it is. It is a creeper type of uptrend, meaning it's not necessarily impulsive. It just sort of goes and goes and goes. It doesn't really pull back, but I might reference prior examples when this has happened. So this is where we are at the moment as we go into the Independence holiday, 4th of July, and the market closed on Monday. Therefore, this does actually make this what we might refer to as bullish holiday drift. We do have the jobs report on Friday morning, so the holiday has not begun. The market will respond to the jobs report. That is our first Friday of the month. That will take place tomorrow. So there could be some volatility, but we don't want to get too complacent to the bull side or the bear side. We still, as prior videos I've discussed, want to be patient. If you are trading the puts or trading the bear side of the market, what you're trying to accomplish is this or other examples like that, where the market does snap back like a rubber band. So that is in play, and that is certainly the odds, and that is a probability of what is likely to occur. But until that happens, we still reference prior events where we've had what we consider or consists of bullish creep or bullish drift. And that is typical in uptrends. And the last time was into early April. We had a little bit of smaller creep, and that's just where we are throughout May. And the month of June took a little tumble, one or two sessions of tumble, but tumble it was, and that paid on the put side. But we've crept back to the highs, so that is where we are. And this has happened once again into November. And more so, I think we're looking more at this sort of situation as we were into October into September, or August into September right here. And that was the drift, snap. And similarly, we'll go back to a little bit further we have April into May and May into June. So what we're looking at right now, again, July 1st, 2021, is this transition from one month to the next. And that does tend to have a little bit of a bullish drift to it. So, and again, this chart takes us back to the beginning of the rally. Over here, I don't normally do this, but this is the hourly chart. And on the videos and the trading style that I take, I am swing trading off the daily chart, but I am timing signals or managing stops or positions within the hourly chart. So, and looking at profile examples there. And this is just, it doesn't look like much, but that swing, that rally is quite strong, but again, quite creep or ooze. And again, that trend strikes again. And I'll do something unusual. I'll drop to the 5-minute chart. Now this is the S&P on the 5-minute chart, and this is these last two sessions of what we call holiday drift or just bullish drift. And it is relatively relentless. We can take it back even further to a 15-minute chart to see this, or a portion of this, and the 30-minute chart does the same, and that takes the entire rally. So we're here, all-time highs, new highs, 43.11. And as Don reminds us, those 11s are critically important for the market, and we close, at least this Thursday, into 43.11. So the next swing of the market, we'd like to focus these end-of-day videos in TheoTrade on what's working now, but what the next setup is. And the next setup continues to be that bearish put play with patience for the market to have the rug pull, or have that rubber band snapback, or have the stairs. We say the market takes the stairs to the upside and the elevator to the downside. We need to advocate caution and patience more than caution, on the put side of the market, which again is similar to the other pullbacks, just like that, and that. But if you are a bull, the first thing you need to know, especially for a new trader, is you've missed your opportunity to get long. That is over. It is finished. There is not a chance to get long at these highs. Your next departure point or your next spot to get long the market with calls or call spreads or other type of buys is after that pullback occurs. Is there evidence for this? Yes, plenty. So again, getting long here, the risk to you as a bullish call buying trader at all-time highs is that the market randomly drops hundreds of points lower or percentage points lower. That's what you're up against, and that is your risk if you buy the market right here, right now. You would be better waiting, standing aside for that pullback to occur, and then purchasing on that dip. If you are the opposite, if you're contrarian and you're a bear, you need patience for the pullback to occur, for the rubber band to snap back. Is there evidence for that? Again, plenty of it. And it's the patience that comes with experience. This looks very similar. And if you got long here above 3,500, think about 43, which is much higher, but 3,500 is a round number. If you threw caution to the wind and went long here, you suffered a large pullback, a drop, a rubber band, or the elevator. Think about those cartoons or Wile E. Coyote off the cliff and those sort of things. You're better off buying after a pullback, and you're better off with patience on the short side to weather this storm before that pullback occurs. So that is the broad basis, that is a broad theme, and that is keeping the plan and the play very succinct and simple. Outside the S&P, the Nasdaq was a little weak in today's session. Tech in general was a little bit weak, but the same logic takes place, and that's an example we had then, some plays that we had with respect to calling this a little top of the market, or at least a put play, and seeing the market drift, but with patience came profits. That's what we're looking at this moment. There will be a pullback, there'll be a snapback, and if you're playing the put side, which you should be, that is to be done with patience. It will take some time. And again, if you're getting long here at the all-time highs, might I suggest you be cautious and wait for that pullback. The risk is just too high for that pullback right now. Now, again, we can talk about individual stocks. The leading stocks of today were Schlumberger, ConocoPhillips, which pushed up to a swing high, and Nike, which extended the all-time high, Oracle, Facebook, again, pushing back to the highs, and some others. But, and the bond market, just quickly, played a little bit to the little refresh or retrace higher. The bond market just basically hit that support level into 143 for TLT. So we'll step outside of that quickly. Crude oil, this is crude oil, with the equity market, made a new swing high. Now for crude, this is not an all-time high, this is a swing high, but the same logic takes place. It's a little bit too late to get long. You want to get long on those pullbacks. Wait for the pullback, be patient, get long. But if you're playing puts, also be patient. Now before we end the video, I like to always take a look at least at the stocks making new 52-week highs. And the reason is these strong stocks should get stronger. And that is a repetitive thing that I like to mention in my trading plan. These stocks are strong now. They have better odds to get stronger. But again, the same logic takes place. Wait for that pullback to get long. The boat has sailed away, but it will return for those risk-controlled trades. So in the market today, 36 stocks in the S&P 500 made new 52-week highs. Take a look at some of them. The first up, just by market capitalization, and we'll sort that here. You can do this on your own scan, S&P 500, new yearly highs, and then sort by market cap. And some of the names, again, just take the top few. We've seen them before. Microsoft. Microsoft similarly crept to a new all-time high. NVIDIA. It is doing so on a split type of news, but nevertheless, NVIDIA continues the uptrend that persisted since, even before 2020. So that is just prevailing uptrend, higher highs, higher lows, and this right here is very similar to that right there in terms of the chart. Nike, we just saw it. We'll talk about Intuit, which has continued higher. Target, which we referenced in Tuesday night's video, that's a very shallow pullback, but Target had pushed to the new swing high. And Intuitive Surgical, eBay, and just quite a few others you can look at. But I'll put the list into the video right here. You are free to pause the video and write down the names or on your own scan. But these are the names of stocks at the moment that are making new 52-week highs sorted by market cap. And I'd put my candidates in the top, maybe 15 or so. As always, be careful, be safe. Jobs report tomorrow, holiday this weekend. Take care. This is Corey Rosen with tonight's Theo video update for July 1st, 2021.